In Common Sense with Craig Bolanos, the CEO and founder of Wealth Management Group, is here with last-minute tips to cut your tax bill. Hello, Craig.
'Tis the season to fine-tune those deductions and ensure you're deploying the right strategies for your personal 1040. And with your portfolio, it just starts with rebalancing. Get your asset allocation back in line. And in particular, now that we're at the end of the year, if you have any losses, be sure to harvest, because you can use any of those losses to offset gains, and up to $3,000 can actually be used against the other income on your tax return. Number two, speaking about investments in portfolios, get out of mutual funds if they're in a taxable account before some mutual funds pay large year-end capital gain distributions. Next on our list, tis the season of giving. I want you to give intelligently. So consider giving cash, but if you're going to give a larger, more substantial gift, I want you to give appreciated stock. Not only will you avoid capital gains tax, but your money's going to go a long way. When the charity sells that stock, they're tax exempt. They don't pay anything. So you win by avoiding capital gains, you win by getting a charitable deduction, and the charity wins by having money to put towards their ministry. Next, turbocharge your giving. Maybe your income's high this year. Maybe you've done a Roth conversion. Maybe you should consider using a donor advised fund by allowing you to supercharge your charitable deduction and get to a point that you're itemizing to offset income. And then last but not least, you gotta make sure that you're getting retiring securely. And that means topping off those IRAs, 401ks, and health savings account, because if the government's gonna pay you with a tax deduction to get money there, why wouldn't we take advantage of such?
What about tax tips for business owners?
Business owners, if you're acting as a sole proprietor, an S corp, a pass-through entity, you could be entitled to a deduction of up to 20% of your qualified business income. You need to make sure, though, that your taxable income stays within the allotted threshold. So what can you do? Number one, consider delaying the recognition of income into next year. Two, claim bonus depreciation for equipment and other necessary business items. Three, consider expanding your company's retirement plan to a chassis that will allow you to put even more money away towards your retirement on a tax-favored basis. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. And if you want to learn more, you can. Check out our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.